So even though we're below that neckline, believe it or not, I wouldn't be overly shocked to see some sort of little bounce over the next week or so, maybe a flag pattern develop, maybe a move back up, maybe retest 44, 45,000, getting back to this trend line. I definitely think that there's so much bearishness now that it almost is due for a little bit of a bullish move. So it's just going to be interesting to watch. But I'll be honest, I am long Bitcoin down here. I've been accumulating in this lower range. It's only for a quick trade, so I want to be clear on that. I'm not going to be holding for 65,000. Just a quick little trade here. I'm not looking to marry Bitcoin in the near term, since I think ultimately it's going lower. I think eventually we're going to get sub 20,000. But hey, it's what's crazy is it's already more than halfway there.
If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. It's your boy Crypto Blood, and welcome to another Kicking It session. I've got a returning guest. I said I wanted to have him on after the new year. We had such a great interview just before the new year about Bitcoin and some of the directions that we were going to go, and it looks like we're heading in the direction we both thought we would be. I don't know, we're at some critical levels, and we're going to discuss that today with Gareth Soloway. Soloway, how are you, man?
Hey, I'm doing really well. Thanks for having me back.
Yeah, absolutely. So you guys can visit Gareth over at verifiedinvestingcrypto.com. Tell us a little bit about this service and this website you got here.
Basically, it's pure crypto. It's all technically based, so meaning that every decision we make to buy or sell is based on the charts. No FOMO, no craziness like that. It's all pure, which gives us an edge, honestly, from especially what we're seeing in the crypto markets recently with the collapse of Bitcoin and other coins out there. We're buying, we're selling, and we're making money while a lot of people are just sitting there watching their gains evaporate. So that's what it's all about. I do a daily video with lots of technical analysis, and I hope that I'm teaching people that are members as well as just giving them great trades.
Yeah, I'll have a link to his site in the section below this video. But I want to start it off with Bitcoin. I saw your tweet from about 4 days ago, and it was showing that we were right there at the neckline, the right side. Where are we today? That was 4 days ago. I'm pretty sure we are lower than where we were 4 days ago. Have we broken that chart? Yeah. This is the tweet that I'm referring to, ladies and gentlemen. That was from 4 days ago. What are we doing now, man?
Yeah, so I'll pop my chart up here so we can look real time. But yeah, we're still below that neckline, so I think that's still an important factor. So you can see here, if I connect the dots right there, the pivot lows, you can see we're definitely below that. But I will say this, is we have seen Bitcoin hit a major support line in the near term. So even though we broke that line, take a look at this. If you go back to that previous fall that took place in kind of May into June here, if you look at where it bounced, look at this trend line right here. And look at the dip that we saw today, where you have this pivot, and right here, then you touched it here, and now you touched it again today. So even though we're below that neckline, believe it or not, I wouldn't be overly shocked to see some sort of little bounce over the next week or so, maybe a flag pattern develop, maybe a move back up, maybe retest 44, 45,000, getting back to this trend line. I definitely think that there's so much bearishness now that it almost is due for a little bit of a bullish move. So it's just going to be interesting to watch. But I'll be honest, I am long Bitcoin down here. I've been accumulating in this lower range. It's only for a quick trade, so I want to be clear on that. I'm not going to be holding for 65,000, but really just a snapback.
Your risk-reward ratio is very low at this point, right? You can risk a little bit at these levels and hide your stop losses right below these areas for potential upside.
Yeah, that's exactly right. So basically you're watching this 40,000 level. You don't want to see Bitcoin have a daily close below there and really start trading below. But really you're playing right with that major support there. And I think you bounce back again. It wouldn't even shock me, believe it or not, to get back to this area right here, which is around 46,000. And again, just a quick little trade here. I'm not looking to marry Bitcoin in the near term, since I think ultimately it's going lower. I think eventually we're going to get sub 20,000. But hey, it's what's crazy is it's already more than halfway there to my overall target from when I was talking back in the 65,000 land.
Kind of getting away from, Bitcoin and cryptos, the overall markets, right? We have the Nasdaq. It has entered correction mode. What's your thoughts on that whole situation? And are we going to see further downside in the equity markets?
Yeah, so ultimately I do think we're heading lower. One of the things that we can see is that the Nasdaq is breaking a key channel today, and this is a very important channel. This is a channel that goes back to 2020 on my chart here. And again, what you can see here, look at this beautiful parallel lines. I think parallel lines are one of the sweetest examples of technical analysis, because it's just like you ask yourself, how the heck does a chart trade within this range? And again, for such a long time. But look at right here, folks. Look at what's going on right here. You can see we are now breaking below this longer term uptrend. And that does make me think that there's further downside in the Nasdaq 100.
Oh, wow.
And, so yeah, I mean, that's a big deal. I mean, if you think
I'm just seeing that. I'm just seeing your chart. Sorry to cut you off. I didn't know this. I didn't notice this because I don't really follow equities. But look at that gap down that occurred. So what does that mean for us? A gap down below the channel.
Yeah, so I'll be watching tomorrow to see if it confirms, but assuming it confirms, I think we head all the way back down. You'll have stair stepping along the way, right? I mean, we're going to get bounces along the way. There's going to be buyers that want to buy the dip, but along the way, I think eventually, and maybe even this year, you get all the way back to the pre-COVID high here. Yeah. Again, you could see, and that's a huge, by the way, that's a massive correction if we do drop that much, or bear market as it would be. But yeah, it wouldn't shock me if we head all the way back to retest that COVID high or pre-COVID high before that big dip, which then led to all the stimulus that the Fed's pumping in. Now, I think what's important to recognize, right, is that the Fed pumped so much money in, and now they're starting to take it out. So if you look at the reasons why the market went higher, why did multiples expand so much? The answer was there was just so much money going into the system. Now the Fed has clearly said they're taking that away. So it only makes sense that you could see a pullback in the markets. And again, the question is, at what prices will we finally bottom out?
Yeah, Goldman and Sachs, I think, came out today saying that they think the Fed is going to do 4 rate hikes. I'm calling them bluff. I think we talked about this before. I think they'll probably get to maybe 2 or 3 by the time that carnage really starts expressing itself in the markets, and then they'll reverse course. Is that still your thesis?
Yeah, it is. Just because historically you can look back and see, I mean, 2018 was a great example. The Fed began to raise interest rates. The markets dropped 20%. And before you knew it, the Fed was lowering interest rates again. So I think, if you look at, they're going to probably taper and be done by the end of March tapering. I think you honestly might only get 1 or 2 interest rate hikes in 2022. And then my guess is the markets are down 20, 30% at that point. And then the Fed is going to have to worry about the unemployment number, right? Because we know that as the stock market drops, the wealth effect shrinks. So people don't feel as rich. They don't go buy as many widgets or TVs or whatever it is. And therefore, then companies have to start laying off. Unemployment goes up. And then the dual mandate of the Fed is that they have to monitor that unemployment rate and keep it low. So then the Fed has to come in with more stimulus. So I'm right with you.
Yeah, what's interesting to me, Gareth, is that the Nasdaq is down 10% from its record high, while Bitcoin is down 40% from its record high. So that kind of gives you, in my opinion, a multiple there as far as how much more the crypto markets will react to a adverse environment. So if we go back to those pre-COVID highs that you talked about in the Nasdaq, I mean, where does that leave Bitcoin? Is it still your target of about $14,000, $15,000 Bitcoin?
Yeah, I think anything, it's hard to pick that exact low, but anything below 20, I start to nibble. Again, I just use my methodology, which is, I never jump all in at one price. I start dipping the toe in the water. Then I do another toe when it drops a few more thousand kind of thing. And I'll just build a position down there because, again, I do believe in Bitcoin long term. I think, again, cryptocurrencies are changing the world. I really liken it to the .coms, right? The .coms, when things were in the 90s, I know a lot of younger people don't remember this, but the internet was just emerging, right? I mean, you could just get online, you could shop online, you could do all the fun things online that people do. And it was this emerging technology like cryptocurrency and blockchain today. So you did have a washout in the .coms. Amazon was like trading at around $100 at the highs. It went to $5. And now where is it? What, $3,300 a share, right? So it gives you an idea that there is upside on Bitcoin down the line. It's just, you just may have to wash out and see sub 20,000. I mean, maybe it even goes to 10,000. I'm not sure. But for me, I'll start nibbling down there for sure.
Man, that would be a buying opportunity of a lifetime.
What's crazy though, right, is that when we say that, and then I'll guarantee 90% of people out there, when it's down below 20,000, they'll be too scared to buy it at that point, even though they're saying now, like, oh, I'm going to buy it, when it gets down there, because that's the way the markets work. They always make you so fearful when you should be buying and so greedy when you should be selling, right?
Exactly, exactly. Yeah, you're going to have a lot of people just exhausted from the losses there. You're right. They're going to capitulate when they should be buying at those lows. So I totally agree with you. Now, David Rosenberg, he's a legendary investor or analyst. He's talking about, and this is a different take, and I want to get your thoughts on this, but he's talking about us having a deflationary spiral going into, 2022, 2023, as the, a lot of people are talking about this inflationary issue that we're going to have, but he's thinking deflationary, and he thinks that this spike in inflation is transitory, which is meaning just temporary. What are your thoughts about whether or not we're going to be in a deflationary environment or an inflationary environment going into 23?
Yes, I mean, this is a fascinating thought process, right? And as a technician, as an economist, we have to kind of look at both angles.
Right.
So to me, just knowing how the government works and how the Fed has said we will, we do not want to let deflation occur. We will print basically they've said we're going to print as much money as possible to not allow that, right? I mean, even when we were at 2% inflation, they weren't satisfied and they were just like, well, we're going to print more and more. So it's hard for me to imagine that would be the case. But one valid point is that if you do see a major collapse in asset prices, like let's say home prices drop by 40%, let's say crypto goes to sub 20,000 on Bitcoin, which means a lot of the altcoins go to zero. If the stock market drops 50%, it does essentially remove a ton of liquidity from the system, right? So then that would be the one valid thing. But again, I just come back to saying, well, if we start to see that, the Fed is going to come out with bazookas, just printing money. So it's I don't know how it all ends, but I'm on the side of, gold is probably the place to be, at least conservatively. And then I think, certain stock areas like the Chinese stocks to me are very cheap right now. Eventually, cryptocurrency is going to be a great place as well.
Yeah, what are your thoughts about like pipeline utilities and telecom sectors? Is that something? I know you're more technical, but just having a general macro conversation here, would those be things to look at as well?
Yeah, I think so. Again, the biggest caveat is to find ones that haven't run, that are good quality companies, right? So again, like even something like AT&T, it was awesome at 22, but now it's trading in just 2 weeks at 26.5. So I mean, for me, I could never chase AT&T up here unless it pulls back. But there are definitely some good quality names that you could look to tuck away that pay a solid dividend and kind of can offset the inflationary rise right now.
Peter Brandt talked about Bitcoin a couple of days ago, and he's saying that, cryptocurrencies will likely get hurt by these rising interest rates in the United States. We talked about that as well. And the former CEO of BitMEX said that he predicts that the crypto markets will be crushed by the hawkish Federal Reserve unless inflationary concerns start being a priority ahead of the November elections. I think we kind of agree with that, but I guess my question to you would be, should you be dollar cost averaging in right here with Bitcoin and the cryptos, or would you be waiting? I know you're buying this area for a temporary bounce,
right,
as a short-term trade, but as a longer-term investor in cryptos, should the sidelines be your position right now, dry powder?
I mean, if you're sitting on the sidelines with no cryptocurrency holdings and you, let's say, have, 20,000 or 10,000 on the sidelines, there's nothing wrong with picking up $1,000 in Bitcoin. I'm a big fan of dollar cost averaging because ultimately no one knows where the low is going to be. I could be wrong. Maybe this 40,000 is the low and we're going to go back to 65. So at least you get some skin in the game, but definitely kind of think to yourself, let me decide and kind of have a game plan, right? I mean, every trader, what's the famous saying? Everyone has a plan until you get punched in the face type thing, right? So go in having a plan and say, okay, I have 20,000. That means I'm going to buy 1,000 here at 40,000. And then maybe every 2,000 down, I'll buy another 1,000. Like have a decisive game plan ahead of time so that you can kind of understand, and that'll keep you more sane and less emotional as well. So again, I don't have a problem with people considering my long-term views like 100,000, 500,000 target. you know, looking back on it, whether you bought at 40 or 20, I mean, yeah, it makes a difference, but not a huge difference. So yeah, just to each personal preference. For me, I'm more of an in and out type trader, but if it does get cheap enough, yes, I will go in for a larger sum for a longer term trade.
No, that's good, man. What did you talk about on your last video on Yahoo Finance that you think, if people didn't see that, would be an interesting takeaway?
Yeah, I think with that, it's just understanding the connection in the markets, right? So this morning we saw the stock market out of the gate collapse to the downside. Bitcoin fell immediately, right? And we've seen kind of a bounce in both, but everything is connected. Everyone needs to understand that assets, because they're all made, you know, assets are traded by humans. So again, we are all ruled by emotion. So when people get scared in one area, it usually trickles into another area and so forth. And deleveraging there's still so much leverage in the system. And this is where some of the people you've noted today, you know, that's a valid point, is that, you know, if one domino falls, everything's built on a house of cards here. And you can really see how the collapse in one asset like stocks can affect so many asset classes.
How much leverage do you think is really in the crypto markets? Rehypothecation, if you want to call it. How much do you...
I think that the average investor is the one that's most leveraged, which is the scariest thing, right? So I've had a lot of people come to me and say, hey, I'm using 5 times leverage, which in the crypto market is actually not that much. In the stock market, that's a lot of leverage, right? It means basically a drop of 20% and you're in a lot of trouble. So you know, it does seem like there's a fair amount. I do think that that's probably why you've seen Bitcoin declining faster than the stock market, you know, X times, because every 5% drop in Bitcoin probably takes out a bunch of leveraged players and forces them to sell their positions. So the question is, at what point, you know, that'll be something to watch, right? When Bitcoin bottoms, it's probably when leverage goes back to a very reasonable level and you kind of see that full washout.
Where are you right now as far as altcoins, from a more fundamental perspective? Which coins are you most interested in at this point?
Yeah, so I definitely have some holdings here. I have some holdings in. I bought Solana recently, just below the 140 level. So just down here, you can see it broke this trend line, but it's coming into some very good support here on the chart. So I like. If I'm going to buy altcoins, and there's that little support there, and I'll add to my position right down here. So these are my 2 levels on Solana. But basically, I want to see a coin that has real value, that's being utilized by a large number. I want to see that kind of quality. It's almost like looking at a stock and saying, you know, what's their technology there? Does it make them a quality company that's going to produce earnings in the future? So a name like Solana, I have a position in. I have a little bit of Cardano down here. If we take a look at that one here, that's kind of come in here, and it's trading very close to some major support on the chart. Let me bring up this line here. This is a good one. Let's see. Yeah, right here. So see this line right here, huge area of support right around $1. So that's most likely where it's headed. But again, I think as a shorter term trader, there's some uses for these names out there, again, for good bounces. So yeah, I'm not opposed to some altcoins. Just be understanding that if you're buying number 350 on the crypto market cap list, then it's very possible that's like, you know, pets.com back in the .coms and go bust, right?
Right.
So, yeah.
Yeah, absolutely. And lastly, I just wanted to get your take on this. Is a crazy story that is really hitting the news wires right now, and it's about CZ. He's the guy, man. I mean, I didn't even realize that he was a burger flipper for McDonald's, and now he's like worth $100 billion. What's your take on just, I guess, the crypto exchange industry, and where are we going with it? I mean, you use those exchanges to trade every day. Do you see that becoming a bigger industry, or do you see the DeFi or decentralized exchange industry taking more of that market share?
Yeah, I think the DeFi, you know, exchanges will take more market share over time. You know, one of the things to keep in mind with the exchanges, and with even like with brokers like Coinbase and so forth, is just be understanding that right now you're in the infancy. It reminds me when I started investing in the late 90s of, you know, I went to like a TD, I think it was E-Trade at the time, and I think I paid like $25 to buy a stock and $25 to sell it back then.
Yep.
So that's the period we're in now. The fees are going to slowly go down and down and down, eventually probably going to zero over the next 5 years or so, because there's going to be more and more competition. So that's actually really good for us as investors. You know, again, so many people, I mean, you know, even I buy and sell on Coinbase sometimes, and the fees are a little ridiculous, frankly. You know, like literally hundreds and hundreds of dollars I'm paying for a transaction. So there are exchanges that are cheaper, and that's going to cause the ones that are more expensive to have to drop and be competition. So yeah, I think ultimately those exchanges, I mean, it's amazing the wealth that's been created, but you will see the amount of profitability come down on a lot of those.
Right. Yeah, I think I totally agree with you on that one, man. So he's got he's got his money.
Yeah.
And, you know, it's kind of race to the bottom at this point for these centralized exchanges.
Yeah.
Any last words for the audience today? Definitely appreciate you coming on to talk about, you know, basically what's come true. I mean, we talked right before the new year, and things are playing out, and we're at critical levels. But what would you want to leave the audience with today, Gareth?
I think the biggest thing, and this is something that I've learned and I keep learning, is that, you know, when things are running to the upside, they inevitably go further than you think. And the same thing on the downside, they're going to go lower than you think. So again, you know, you look at Bitcoin, did I ever think it would go to 69,000 when it was trading wherever it was at the start of 2021? No, I never had an idea of that. Maybe some people did. But again, same thing on stocks. I've seen stocks go way higher than I ever thought. And then on the same side, just be aware, and this goes for cryptocurrencies, is that, you know, you might think it's a great level to get in, and it could go another 20, 30, 40, 50% lower in a bear market. I've seen it countless times. Even for me as a seasoned trader, it's so hard to kind of get your head around how emotion will drive things much, much lower than they should be, or much higher than they can be. So just be prepared. Dollar cost average. Have a game plan going in. You know, don't go all in at one level thinking you're a genius and you're going to be right. Accept the fact that even me, oftentimes my first entry is not the real low on a stock or a cryptocurrency.
Yeah, it's a lot of, I've been watching Bitcoin on the 1 hour chart. That's pretty much where I trade. And it's a lot of price action right now, ladies and gentlemen. So when you see those wicks on those candles, you know it's a battle going on between the bulls and bears, and we'll have to see what happens. I'll have Gareth back on in a couple of months here to see where we stand, man. I think we do head lower, unfortunately, but for me, no. I've got dry powder on the side waiting to pick up those cheap Bitcoin, so we'll have to see what happens. But again, Gareth, thank you for joining me today on another Kicking It session. Ladies and gentlemen, make sure you check out Gareth's website. I'll have a link to that in the description of this video, verifiedinvestingcrypto.com. And make sure you guys like, share, and subscribe to the channel for more Kicking It sessions like this. It's your boy Crypto Blood, and I'm out of here. Holla! If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. Holla!